Okay, so your home. It's probably your biggest asset, right? But what happens to your mortgage if your income suddenly, well, disappears? In this explainer, we're going to break down how you can safeguard your home loan against an unexpected job loss. Let's dive in.
So let's just start with the really tough question, the one that I think a lot of us have in the back of our minds. What would actually happen to my home if I lost my job tomorrow?
And this quote, man, it just hits the nail on the head, doesn't it? When you've got those monthly payments, your EMIs, losing a job can literally feel like the ground has just vanished. It's that sudden instability that makes protecting your home loan so crucial. This isn't just about money, it's a deeply emotional thing.
All right, so let's really dig into this fear. What does defaulting on a home loan actually mean, and what are the real-world consequences?
You know, this is so much more than just missing one payment. It's the whole domino effect that can follow. The potential damage to your credit, the incredible stress on your family, and, of course, the terrifying thought of losing the very place you call home. It's all about protecting your sanctuary.
But here's the thing. What if there was a financial safety net designed specifically for this exact situation? A tool that could catch you if you fall? Well, that tool is home loan insurance. So what is it? Well, in a nutshell, it's an insurance policy for your mortgage. It's designed to step in and handle your monthly payments when life throws you a serious curveball, making sure that one crisis doesn't just spiral into another one.
I love this way of looking at it. It stops being just another expense and becomes what it truly is, a shield. It's a proactive step you take to defend the dream of homeownership that you've worked so hard to achieve.
Okay, so how does this whole thing actually work? Let's get into the nitty-gritty. How do you get this protection, and what happens when you actually need to use it? The process is actually pretty simple. You pay a one-time premium. And the cool part is, this can often be rolled right into your total loan amount, so you don't really feel that big hit up front. And in return for that premium, well, if something covered happens, like losing your job, the policy kicks in and starts covering those monthly payments for you.
But you know what? The most valuable thing this insurance buys you? It's time. Most policies give you this crucial 3 to 6 month window. That's 3 to 6 months to just focus on finding a new job without that crushing weight of a mortgage payment hanging over your head.
Okay, this is super important. Not all policies are the same, not by a long shot. You've got your standard plans, which might only cover the loan if the borrower passes away. Then you start getting into the extended and comprehensive plans. These add more layers of protection for things like disability, critical illness, and, the big one for us today, job loss. This is a really key difference to look for when you're shopping around. Which of course brings us to the big question. With all these options out there, how in the world do you choose the right shield for you? Let's talk about the benefits, but also the fine print that you absolutely have to pay attention to. Look, the number one benefit, hands down, it's peace of mind. It's that psychological relief you get from knowing you have a backup plan. This lets you channel all your energy into your job search instead of spending sleepless nights worrying about foreclosure. And it's not just about feeling better in the moment. There's a huge long-term financial benefit too. By making sure your payments get made on time, this insurance prevents defaults that could seriously wreck your credit score, protecting your financial health for years and years. And maybe most importantly, this whole thing, it secures your family's home. It makes sure that the burden doesn't just fall on them during a crisis. The policy protects them from that immense financial pressure and, well, the potential loss of their home, keeping things stable when they need it most. Okay, when you're comparing policies, you're going to want to treat this checklist like your new best friend. Seriously, dig in. How long is the coverage? 3 months? 6? A year? And check the fine print on job loss. For instance, a lot of policies won't cover you if you resign or are let go for a specific reason. Now, here's a big one. You don't have to buy the insurance your lender offers you. You can often find a way better deal from another insurer, so definitely shop around. And finally, make sure you understand the claim process and any waiting periods before the coverage actually starts. Answering these questions before you sign anything is absolutely essential. All right, so let's say the worst happens. You actually need to use this thing. What do you do? If the unexpected occurs, here are the steps you'd take to file a claim. The good news is the process is usually pretty straightforward. Step 1, call your insurer right away. Don't wait. Step 2, get your documents in. Step 3, once they verify everything, the support kicks in. This is all designed to reduce your stress, not add to it. And that's really what this all boils down to, isn't it? It's about making a smart, calm decision today to avoid a panicked, incredibly difficult situation tomorrow. It's just proactive protection for your future self.
So, we're going to leave you with one final question to think about. Your home, it's probably the biggest and most meaningful investment you're ever going to make. The question is, have you put the right shield in place to protect that dream, no matter what life decides to throw your way?